In 2008, the world didn't just lose money. It lost jobs, homes, dreams, and for many, hope. But what if I told you this crisis wasn't an accident? What if the biggest financial collapse in modern history was quietly built, step by step, in plain sight? This is the story they rarely tell about the 2008 financial crisis. In the early 2000s, America looked unstoppable. Home prices only went up. Credit was easy. Banks were generous. And everyone believed the same dangerous lie: housing never falls. Buying a home wasn't just a dream anymore. It was seen as a guarantee of wealth. If you couldn't afford a house, don't worry. The banks would find a way. Banks began approving mortgages for people who clearly couldn't repay them. These were called subprime loans. Low income, no savings. Sometimes, no proof of income at all. At first, the payments were low, almost too good to be true. And they were. Hidden inside these loans were time bombs, interest rates that would explode later. But the banks didn't care. Why? Because they had found a way to offload the risk. Banks bundled thousands of risky mortgages together and sold them as safe investments. These products had complicated names: mortgage-backed securities, collateralized debt obligations, or simply financial magic tricks. Risky debt was sliced, mixed, repackaged, and somehow transformed into AAA-rated assets. Even pension funds bought them. Governments trusted them. Investors worshipped them. But there was one problem. The ratings were a lie. The agencies meant to protect the system were paid by the banks themselves. Conflict of interest? Absolutely. Say the truth and lose business. Or stay silent and get rich. They chose the money. The entire system became a house of cards, balanced on debt, greed, and blind faith. Then, the interest rates reset. Monthly payments doubled. Millions couldn't pay. Homes were abandoned. Defaults exploded. The safe assets turned toxic overnight. In September 2008, Lehman Brothers collapsed. One of the largest banks in history, gone. Panic spread faster than fire. Banks stopped trusting banks. Credit froze. The global economy slammed into a wall. This wasn't just an American crisis. It was global. Businesses collapsed. Unemployment soared. Entire countries entered recession. Families lost homes they'd worked for their entire lives. While the people who caused the disaster were often rescued, governments stepped in with trillions of dollars, not to save homeowners, but to save banks. Losses were socialized. Profits stayed private. Ordinary people paid the price through taxes, inflation, and lost opportunity. Trust in the system was shattered. The real lesson of 2008 isn't about mortgages. It's about human behavior, greed, short-term thinking, blind trust in too big to fail. Today, global debt is even higher. Financial products are even more complex. So the real question isn't if another crisis will happen, it's when. If you want more untold stories about money, power, and economic collapse, subscribe to this channel. Because understanding the past is the only defense against the next crisis.